Hey everybody, welcome to Market Radar for the week of April 24th, last week of April. And the Market Radar is exactly that. We look at what the charts are telling us that's going to happen in the next week. I'm Day Trader Rockstar. I broadcast live each and every day on daytradingradio.com, where I teach trading. We teach future trading, stocks, options, the whole thing. I've been doing this full-time trading since the mid-90s. I've been teaching live on our show since 2007. We are starting a separate section for the analysis of the S&P E-mini contract. It will be on this channel, and it will be called Market Radar. I typically do send it out to all the members and stuff, but I just want to isolate it onto a new channel. So make sure you subscribe and like, if you can, the new channel, so you get the updates. And again, this will just be focused on the MES trading and the futures contract and the ES contract, and maybe even the NASDAQ and Dow at times. And again, we're going to be looking at the technical time frames from the daily, the 60, all the way down to a smaller time frame, and focus on what the charts look like going into the next week. All right. So this is actually where we are right now, and this is something you might see me discussing each day on the radio, is where we are on the S&P. The market has so far put in that October low. We've moved all the way up to January pullback, and then one last time here in March we had a nice little pullback. And that pullback from March was really significant because it came all the way back to our retracement trend lines. Now, if you're familiar with the methodology, I teach the high probability methodology, the HPS methodology, and it's based off of 5 indicators, including recognizable patterns, trend lines, support and resistance lines, reversal candles, and stochastics, and maybe some other little things, reversal candles. I did mention that, but the stochastics are our baseline, our basic groundwork that we work off of. So as you can see, this was back here in March was our pullback here, and we were kind of watching this rise in trend line. This red line underneath us goes out to October lows is important, and also this black line coming down, and we held that level. We bounced through it, and we came all the way back down to that black line, and that was significant. All right, and then we kind of pushed back up, and we know we have certain rules that you will learn. If you look at the some of the library stuff, I'm going to be posting some stuff and giving you access to some short-term lessons on charting. So just again, make sure you subscribe. So this is where that's going to end up going. But the reason why these trend lines work so good, the method behind it, what they're called, the X marks the spot where two trend lines intersect. Understanding the relationship between the trend lines, if they're broken, and how well they hold up when they retest, and that's important too. Right now, I can tell you right now, we came back up above that red line, and we've been holding that, line, and that's on the daily chart. And the daily chart here, you can tell we're looking at our stochastics, 2 bands up here, the 9.3 and the 14.3. And not go into detail on that. Again, I have separate lessons all on this right now. You can find those at daytradingradio.com. But the rotation here, even though we are rotating slightly lower, we've been chopping around here, so we can't get a definite call on if this is aggressively bearish, or we're going to push back up and continue to bounce and ride this 20-period moving average and ride this trend line higher. Sometimes very difficult to make that call. It's more easy to call an overbought and oversold level, but you can see it's kind of a flag. We're not really selling off aggressively, and the market's in a limbo state right now. And we could, as you I'm sure if you're interested in the market, you listen to this video, you try to follow up on it, and you probably hear a lot of the talking heads on TV, and the majority and everyone says, hey, this market's in a position right now where it's trying to figure out what to do next. Is it overvalued? We have earnings? Is the earnings going to bring down the market? Inflation, interest rates, all these things are playing a part.
Tradometer and Q overbought.
And sorry for your ears right there. Some of the things you might be hearing in the background represent some of the tools that I've built to help trade futures trades. So that was That was the rock bot and the tradeometer going off. We actually are live right now on a Friday. Let me turn that down for you. I apologize if that blew your eardrums out. All right, so let's just get back here. So that's our daily. Our daily, we consider our daily neutral at this point. Neutral on our daily analysis. There's your neutral. And for neutral on the daily. I like to start off with the weekly, but the weekly is very hard also because of it takes a long time, a whole week, for that weekly candle to form. And if it's embedded, it could stay embedded. And right now this is embedded. And I would have to say, just because of how this is flatlining here, that would be a positive for me. So I would actually see the weekly as positive. The daily is neutral. And we're going to go down to one of the more important time frames I like to watch, is the 1 hour time frame. This is where I'm making a little bit more of a call that we are starting to see this oversold, and it's an organized little pullback. You can see there's an underlying trend line here too. So you have this kind of an underlying trend line. The top area here, you might even want to reach out and say maybe that's a falling wedge pattern. We could probably now zoom in a little bit more and see this thing start to take shape with that trend line right underneath us. I'm seeing a low here and a lower low, or at least a double bottom low, and a higher low on the stochastics right now, and that's telling me that we have a kind of a little divergence, buy side divergence. So a couple things here on that 15-minute chart is telling me that we're going to pop up. So overall, I am bullish on the charts going forward. Now it's a Friday, it's options expiration, and there could be a lot of news coming over the weekend that moves this, but I am still very bullish in this market, even though there is a lot of negativity out there. So we're going against the negativity. I like some of the time frames here. I like the hourly time frame. As we pull into this wedge pattern, I like that small little reversal candle on the 15, or that divergence on the 15. And we bring it all the way down to the 5, which is kind of neutral here. You can see that 14.3 stochastic here is kind of right around that 50 level. And this price is just going sideways. So this is going into next week. All right. We don't have all arrows up, but I would say, again, we have a bullish view on the weekly. We have a neutral view on the daily. We have a bullish view on the 60. The 5 minute and the 15 is also very bullish. The 5 minutes too short to really count on this video because that could just move around a lot. So that's what we got going into next week, and that's going to be it for our first version of the market radar. I hope you enjoyed. I want to try to keep it under 10 minutes. I know my videos get really, really long, and if you're interested in more of the videos here, check out daytradingradio.com. And until then, we'll see you in the next video. Subscribe and like. Thanks.